Welcome to Crescat's Market Call, featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing, as well as the fund's performance, can be found on Crescat's YouTube channel or on our website using the QR codes on the slides. The type of investments discussed on these videos can carry significant risks, including risk of loss. The videos are intended to be general discussions of macro investment themes, the mining industry, and news with respect to the companies in our activist metals portfolio, and are not intended to be investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and the discussion in these videos has been prepared with that level of audience sophistication in mind. Any forward-looking statements may or may not come to fruition. If you enjoy our videos, please click on the like button and make sure you are subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on X for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to our head of investor relations, Merrick Iwahashi. His contact information is on the screen now, and it can also be found on our website at crescat.net. Welcome, everybody. So today we are pre-recording. I'm pre-recording here on Friday morning, September 5th. Tavi recorded last night, and Quentin will be recording right after me. So everything is pretty fresh, including we have the jobs data that just came out this morning, and another weak jobs report. The U.S. economy added only 22,000 jobs in August, much weaker than expected. Unemployment rate is still high and rising at 4.3%. Not super high, but starting to rise. Highest since October 2021, and the June jobs growth was actually revised to negative. So we had job losses actually in June. July was revised up just slightly. But you can see in this chart here from Heather Long that the jobs trend has just been weakening consistently, and so this is giving the Fed the ammo to be able to cut rates, just exactly what Trump and Bessent want to see. Let's go on to the next. In fact, the yield curve, the Fed funds curve, is now pricing in 100 basis points of rate cuts into by March of 2026. Basically 100% probability of a rate cut later this month now, based upon this jobs data by the Fed. And but what's the problem here? At least I noticed a few minutes ago. While the short end of the curve is coming down, two-year yields are down significantly. The long end is actually going up. 30-year yields were up. I think 10-year yields were up as well when I peeked at them just about 10 minutes ago. So what's the problem here? We still have the stagflationary type data that's coming out, and the Fed is going to be cutting rates into an inflationary environment. This is the most bullish type of a setup that it could possibly be for precious metals and for precious metals mining stocks. And it is, and that's why we are heavily focused with the debt, the deficits, and the administration's plan to ramp up the economy through onshoring, reindustrialization, et cetera. We have an inflationary environment. Of course, the goal of the administration, while it's not explicitly stated, it's pretty clear that they want to weaken the dollar as a means to improve the trade deficit situation and to essentially grow the economy on a nominal basis, but largely through inflation. So the game plan is we are going to try to inflate our way out of our debt problem, and this is why we're heavily focused on precious metals and on precious metals mining stocks. And so let's go on to the next. Just one other nuance from the jobs report this morning. Data from this came from Zero Hedge, but the underlying data comes from the BLS. The full-time jobs we actually lost 357,000 full-time jobs in the month of August, and it was part-time jobs that grew. So it's a really weak underlying type of a jobs report that we just got today, further increasing the likelihood of those rate cuts, like 100% probability later this month, and continuing in the months ahead. So let's go down. Crescat, we still have 5 of the top 8 performing hedge funds. This is through the July data, according to the Preqin database, and there's over 2,500 hedge funds now that have reported their numbers through July, and Crescat has 5 of the top performing hedge funds year to date, and we put up positive numbers in August as well, which I'll show in a minute. So it's likely that we're going to continue to have some strong showings in this Preqin data for our year-to-date performance. Now look, everyone's going to say, well, Crescat, you had a couple of years there where you underperformed the markets and you were actually down in some of your funds, and it's true. We have stuck to our guns based upon our conviction regarding our positioning on the long side, especially with our activist precious metals portfolio, which is an entire fund with the precious metals fund and the institutional commodity fund, but it's also the largest long only theme in our global macro and long short strategies. And that theme underperformed for us. It is now showing why we stuck to our guns, and I think we are still very early in a long-term secular bull market for precious metals mining stocks. And we're not just about buying gold or buying silver. We're about buying companies that have the most upside leverage to the price of gold and silver. And we believe that is predominantly in the small cap exploration segment, as well as on the development side of things. Yes, we like the large cap mining producers as well. But the real upside, we think, comes from this activist exploration strategy that we have, where we can create some of the biggest new discoveries around the world by getting money to the companies with the best management teams and geologists and technical teams to be able to do the drilling to create the new big high-grade discoveries of gold, silver, copper that the world needs. There's been an underinvestment in mining over the last 10 to 15 years. And so there's a huge supply. There's been an underinvestment in drilling and exploration. And so there's this big supply-demand mismatch. And that's why we've been getting the money to these companies to do the drilling for the last 6 years. Now we have some of the biggest and best new discoveries and significant activist stakes in a portfolio of close to 80 different small cap high growth exploration focused stories and development stories, and we think there is a lot more upside still to come. No guarantees, but I think it's very early still in the cycle. Let's go on to the next. We just have recently celebrated our 5-year track record back at the end of July. We continue to have another positive month. The benchmarks had a positive month as well that last month, and so the entire underlying backdrop for precious metals mining stocks is starting to outperform the rest of the market. I think Tavi coming up will have some slides on that to really show how the mining industry, the mining stocks are outperforming just about every, in a big way, every sector year to date in the stock market. But our fund, 30.5% net annualized returns now since inception. This is 5 years and 1 month through August, and knocking the socks off of the benchmarks, as you can see here. Let's go on to my last slide. So we look at Crescat and all of our investment strategies. We basically have 5 hedge fund strategies for accredited investors and for qualified purchasers. Our institutional funds are for qualified purchasers only. We have 2 SMA strategies too. Our large cap SMA, which has a almost 27-year track record now. That's the first strategy that I launched as a portfolio manager back in 1999, and that strategy is outperforming the S&P 500 index. And then we've got our precious metals SMA strategy as well. That's a strategy that we are going to be trying to recraft a little bit to be a little more focused on larger cap and more liquid names, so that it doesn't really compete directly with our precious metals hedge fund. The issue with the small cap names in our precious metals hedge funds is that we predominantly participate in private placements, pipe deals in public stocks, where we can get money to the companies to do the drilling. We can come in at a discount to the public market price and structure a deal with these companies where our fund gets warrants to get further upside if we're successful with our drilling. And the problem with the precious metals SMA, when we're investing in a lot of those same stocks, is that the investors can't participate in the private placements and the warrants. It's something that we can do really only exclusively in the funds for practical reasons. Anyway, that's what differentiates the precious metals SMA from the funds, is the SMA can't get the private placements. And so you're going to be, but we're going to be recrafting that fund a little bit to focus more on some of the larger, more liquid names, and not compete so directly with the precious metals fund. I encourage everyone, if you're interested, to please go to our website. We have all this information. We show both in the funds. We show both the with the entire fund performance, including the San Cristobal side pocket, as well as the X side pocket performance. So 1 year ago, we put a private investment that we own inside the funds into a side pocket, and Deloitte, our auditor, really insisted that we do this. But San Cristobal is one of the most exciting stories that we have in our portfolios, and we own one of the largest silver producing mines in the world, with a new silver discovery 40 kilometers away that is potentially one of the largest silver discoveries in the last several hundred years. We think there's a lot of great things going on with the drilling there, and a lot of upside still to come. And we do have a plan to ultimately get that investment out of the side pocket. But we because of the very bullish silver environment and comparable prices and all the cash flow that San Cristobal has been generating, we're forced to do fair market valuation. And even though we're valuing this company at less than 4 times free cash flow, which we think is conservative but fair. We did have to do a markup in San Cristobal last month, a write-up, and so there was like a 10%, 9.4% increase in the price of San Cristobal last month inside our funds as well. Anyway, so we have some exciting things in store for today. One thing I'm really excited about is that Tectonic, one of my favorite positions among our exploration-focused companies, they finally got their news out on the progress of their drilling up at their flat project in Alaska, and they have a great news release. And if you go to some of the further attachments in that news release, you'll see a whole slide presentation with lots of core visuals and geologic descriptions of what they've hit in their phase one of their drill program. I really hope Quentin's going to be going a little bit more into depth on that and showing some of those slides here later today. But I encourage everyone to go to Tectonic's website, look at that news release that came out on September 2nd, and click into the PowerPoint presentation where they go through a lot. There's many visuals. I mean, I think it's incredible looking core. I'm really excited about what they've been hitting at both at Alpha Bowl and in this new section that didn't have a name to date, so they call it No Man's Land inside their Chicken Mountain section of I mean, really cool looking visuals and exciting new vein densities and then a golden apex as well, which is where they had some historic drill holes that hit very high grade gold, and they're coming up with core that looks very similar to that. Now the assays are all still pending, so this is all visuals but you can go look at the core. You can read the geologic descriptions. I encourage everyone to go check out Tectonic. So Tavi's going to have a macro presentation here next. I'm going to flip it over to Tavi.
All right, everybody. Let's get started with my presentation for this week. We'll be talking a lot about some of the data that came out this week, but also lots of macro ideas that I think are very long-term oriented for investors in general. Again, just our views, nothing with the crystal ball mentality here. Today, we just saw the unemployment rate number came out. Most of labor data came out. If you aggregate the last 4 digits of the payrolls, it is trending lower in a significant way. You can also look at the unemployment rates is at the highest level since 2021. Now, there's some question about the validity of that data, certainly. But nonetheless, there is certainly a weird situation where you also look at the ISM manufacturing, which has nothing to do with this labor data in the BLS and so forth. And it's also showing softening in the labor numbers. So I should say that is a survey, not an actual data, but it is certainly, I guess, important to add that to the picture as we consider all these macro settings. And so clearly looks to me like employment is weakening, but inflation, on the other hand, has been strengthening in a large way as well. And which brings me to this sort of inevitable, situation where the Fed is potentially facing, and I don't care what Fed would be in this position. Eventually, we have to take care of our finances at home, meaning the fiscal situation, and ultimately that drives rates lower and allows inflation to run hotter than historical standards. Now, let's speak about the elephant in the room, which is this chart. This chart was something I worked on last week. In fact, just the history of how this chart was created was basically I was talking to Roni Sterfole from Incrementum AG, and he asked me to update one of my charts for his letter. We collaborate on those things, and so I'm happy to share data with him, and I always use his data as well for my own research. And so it's certainly a collaboration. But in the middle of that research, I was the former version of this chart was not this, and I was going deeper into something I had it wrong in my analysis. I wouldn't say necessarily hugely wrong. I mean, if you look at the foreign holdings of U.S. Treasuries, you're going to find that that number has been rising at all-time highs. And it's always been fascinating to me that that number continues to grow, despite the fact that we're hearing everyone saying that central banks have been buying gold and they're really not acquiring too many U.S. Treasuries. Then you looked at things like Japan's accumulation of treasuries recently, Europe's accumulation of treasuries, but the number wasn't adding up. And so I was diving in a little deeper at the FRAD website. Suggest everybody to go look at that website. It's so much information there. And as you dig in deeper, what you find in that whole analysis is that there's really two series. One series that shows the total amount of holdings in U.S. Treasuries by foreigners, and there's another one that is specifically for central banks, and the conclusion is that they're very different. One, the central bank's holdings have been certainly contracting in nominal terms, not just relative to total amount of debt outstanding, because the debt has been growing so much that we know that the buyers out there are not buying as much as they used to. But I wasn't aware, and I know people have been saying this, but nobody has really shown the actual data outside of looking. And trust me, I'm the one responsible of also putting this data out. And so the way I've been reporting this is always looking at relative to how much treasury is outstanding, which is a fair way to assume that there's a lack of appetite to buy this. But in nominal terms, now this is showing a decline, which is key. And when I looked at that, I was like, well, hold on a second. Now I can put this in the same scale, because we're talking apples and apples. We're looking at holdings of treasuries relative to foreign reserves, and we're looking at gold holdings relative to foreign reserves. And that's when I found, when you apply gold prices where they are now, you were above the percentage of where we were in terms of holdings. And so let's dive in deeper in this chart. You can see that the yellow line, I mean, if you see this, first time since 1996, what an incredible data point. Now, what is remarkable about this is that if you think about it, we're just getting started most likely, because back in prior eras, like the 1970s, we reached close to 60%. Again, 60% of foreign holdings of gold relative to their foreign reserves. If we include the Fed, is about 74%. So all I'm here to say is that the imbalances that we had back in the 70s versus what we have today are severely worse, which makes me believe that the amount of holdings relative to foreign assets is going to have to grow substantially, again, in my opinion. And if that's the case, you have to think about, how does that percentage increase? There's two ways. One, through accumulation of gold, or through a appreciation of the price, i.e. a revaluation of gold price. And so you start getting to a scenario where you have, and this is what I like about macro. You have this very long tail of a constructive view on gold prices, where that the largest buyer of gold itself is pretty much forced into purchasing more or revaluing the metal. Okay, that's my view, at least. And then number two, you have a situation where a bunch of securities that are linked to those metal prices are extremely cheap. I don't think I've ever seen a setup like this from a macro standpoint. I'm talking about miners, obviously. You look at the mining industry today, where are they trading relative to where gold prices are? And majority of these companies are trading as if gold prices were at 2,000, even sub that amount, dollars an ounce. And so I think that's the way to express that view in the markets. I'm always thinking about not just interesting data to point out, but how to approach this as an investor. This chart I just put out this morning, and I think it's very relevant for this discussion as well, because we were talking about how central banks are boxed in. Well, let's talk about the US alone, because what it appears to me that a lot of macro commentators out there have been separating yields in the dollar and talking about these instruments as if they were different. In my view, they're extremely similar, if not the same, in this environment we're in. Of course, in prior eras, you should be separating them. They have been behaving closer and closer. You can suggest that the dollar has been moving a bit ahead of yields, and maybe yields need to fall much further. That's my view. That doesn't make me bullish on the dollar. No, I think that these three instruments, it's almost like it's not just a view. It's not just it's almost like this is becoming a policy, an unavoidable policy, where you need to get suppression of yields in the dollar. And the main reason for this is actually fairly simple, is because we're running a twin deficit. For those who don't know twin deficits, we often talk about the trade issue, the fiscal issue, but lack to discuss the problem with the trade balance, i.e. what Trump is trying to do with tariffs and all these things. Well, it's not that we're seeing a large deficit on the trade front. Structurally, the trade issue is becoming very pronounced. And when you add that to the fiscal side, this is extremely severe, what we're seeing here. And so how do you fix that with also an extreme amount of debt? Well, I think something has got to give. You got to lower the debt burden to service the debt, which is through the yields. And you can't allow at the same time the dollar stay at record valuations relative to other fiat currencies. You have to devalue the dollar substantially. And so let's look into this one. You have now the Big Mac Index. It's an interesting way of looking at the world. For those that travel as much as I do, and I think Kevin and Quentin certainly travel a lot as well. What you find is that very clearly is I cannot recall, and I moved to the U.S. about a decade and a half or 2 decades ago, and what I can tell you, I don't remember seeing the U.S. economy as expensive as it is right now. It's remarkable to see. You go to the mall, you go to restaurants, and we find it normal to spend over $100, $200 for a dinner in two people, and it's just fascinating how this is not normal. You go to any other country, you don't pay that the same amount, and I think inflation is a phenomenon that it's slow. It doesn't work its way into the system so quickly. It actually takes its time, and it sort of changes the behavior of people. Now you're seeing folks starting to cook more at home, and all these trends that are now being really unleashed because of the cost of living. Folks not being able to afford homes and all. I mean, this is a real problem. And what I find fascinating about this chart is that if you're from Brazil, which I am, it was normal back in the days it still is actually, to take somebody. Let's just say you're taking someone on a date, and you go to McDonald's to have a Big Mac. It's not uncommon for teenagers to do those things, or even older people to go to those areas. Why? Because it's an American brand, and you don't have those things often in those countries, and so they appreciate the fact that you can have that in those areas. And so usually those things have been always very expensive. And so maybe that's why I find it so important to see that the U.S. is, and I know, I live in the U.S., we know for a fact that everyone sees McDonald's and all these other brands as places where, we don't announce to our friends, hey, I'm going to, to get a Big Mac or something. It's a thing that people do it, more hiddenly, I guess, relative to other countries. And so I find it fascinating, the fact that today a U.S. Big Mac is costing more than in other parts of the world. And I think that speaks volumes to this idea that it's so expensive to live here. Now, I'm speaking living in Denver now, that people are starting to think, well, I can have a great life in other countries and for much cheaper. And you have to think from a macro standpoint, adding to that whole idea from a flow perspective. You start to see that more often. Capital has to leave US-based assets to go somewhere else. It's the same thing that happens with equity markets. Now you start seeing folks say, well, equity markets in the US are too expensive. I'm maybe going to venture myself into foreign markets a little bit. I'm willing to take that risk. Maybe I'll start with Japan. Maybe I'll start with Europe rather than emerging markets. Remember that whole idea of acceptance of risk. And I think that that's an important discussion here. And so notice that most developed economies are the expensive ones, and most of the emerging markets and less developed economies, arguably China, put it as less developed because most parts of China are less developed, and there's parts of China that are very developed. But for the discussion here, and I don't think China would change my opinion on this, and it shouldn't change yours. I think it's fascinating that a lot of emerging markets are so cheap. All right, well, let's talk about something else here. U.S. yields have been declining, and I think this is just an illustration of what I said before, where, if you go back in this chart where you're seeing the U.S. yields and commodities, you can also do this with inflation expectation in the market, or the big break-even rates, which recently, they usually trade very closely. So yields tend to trade very close with inflation expectation. And now you're starting to see this divergence. It's because of the potential changes in the Fed and the Trump administration trying to force the policymakers in the monetary front to lower rates. And so all these types of things are causing this divergence in the market, where market participants begin to price in, well, we're going to see more inflation, and also we're probably going to see a reduction of rates. That's the world we're in. And if you think about it, what is the release valve of that from an investment standpoint? Well, it's hard assets. And so I'm extremely constructive on hard assets, particularly commodities. I think that you can not just be bullish in gold. You can really diversify that view in all sorts of hard assets. We happen to have an opinion that mining is extremely cheap, and mining is related to hard assets. It's a hard asset generating business, and I think that that's one way to express your view. There are plenty other ways to express your view. Now, right now, energy is really cheap, and nobody's seen the opportunity there either. And agricultural commodities are also very interesting. Like, notice that these commodity trends, they happen in a dynamic way where you tend to see a rotation, right? I mean, now gold, the metals are at the top. Everybody likes the metals, but 6 months, 12 months from now, it could be energy. It could be agricultural. You don't know. I don't know. But certainly when you're in a commodity bull market, you keep going up and down in that whole rotational dynamic of commodities. One thing I noticed is that GDX ETF assets under management has been making new levels, or record levels recently. This is also a function of price. Keep that in mind. Prices are trying to break out and make more with authority new highs and break that 2011. Remember that we're well above those levels in the gold price. So when you think about the opportunity here, because the first thing assets under management, record levels, and you're telling me we haven't invested enough in mining. Well, if you look at the gold miners to gold ratio, what you're going to find is that, we're still 60% below the peak levels from 2011. In other words, there's a leverage that happens on the way up and on the way down that we have not appreciated given where gold prices are, in my opinion. I think that's the whole point of this. Speaking more specifically on energy, this chart is fascinating to me because we've been talking about drill baby drill policies in the US and been talking about we're going to increase production, and production has been trending higher, indeed. But one thing we haven't noticed that happens actually with the lag in terms of the effects of this is that operating rigs in the US have been starting to decline, and very severe declines. I mean, we're seeing 15% in the last 4 months, which is the highest, or the lowest, I should say. Well, depends on how you're going to frame it, but it's the highest contraction that we've seen since the COVID lockdowns, or the lowest number, lowest rate that we've seen since the COVID lockdowns. And so, I do think this is eventually going to cause an issue in oil. I think oil is very mispriced. I think also energy companies are mispriced. We are seeing lots of volatility in energy recently, particularly in oil. If you notice oil companies relative to oil itself, they've been doing quite well. They've been doing, they quietly well, which I find it remarkable. In fact, if you look at the energy stocks ETF, you can see that we've been sort of bumping into this resistance for some time, and potentially could be breaking out. And I think that's going to be the case. I feel very strongly that one, miners should be looking at how to secure their margins at all cost. I mean, it's easy to be at the top. Well, not easy, but it's, when you reach the top, of your career, of your success of as a company, the immediate reaction I have is how do I maintain that position over time? Consistency is always the hardest thing. And so maintaining that position in this case, and how it applies to a mining company, certainly is thinking about securing your margins. And energy costs is a large percentage of that for most mining companies. And so consider that idea as how to hedge energy costs if you're a part of this, because I'm really I'm trying to be someone who speaks about this industry, hopefully shares informative things about this whole industry. And I think it would be important for leaders in this space to be aware that the gold to oil ratio doesn't stay at these levels for a very long time in history. The silver to oil ratio also doesn't stay at these levels in history. Even the copper to energy cost is also extremely high. Hence why you're seeing these large margins. And so think about how to hedge that risk, because it's a real risk for the industry. Silver prices quietly moving, lots of skepticism looking at this and saying, gold has been moving more than silver. I don't understand why silver is not moving a lot. It does not matter to me at all. The fact that we're in this 40 or above now, but 41, 42, 43 dollars an ounce at silver prices with the gold to silver ratio at these levels, it's just the most bullish thing I've ever seen in my career. Again, these are just my opinions, and I've said this multiple times in the past. I do think silver is the most undervalued metal on earth. And it's not because, and some people would say, well, what about platinum? What about this? Look, I just have a pretty good grasp of supply, where we are. I have a pretty good grasp of the demand potential for silver in terms of where it comes from monetary side. It comes from also industrial side. It comes from solar now. And I don't think that's ending anytime soon. And when I see the constraints on the supply front versus where we are with the demand, versus where I think we could go with gold prices, versus what what history has told us in the past about the monetary aspect of silver itself. Yeah, I'm very constructive on how silver could be trading in in the next year or so. Like I do think we could see new highs, and that's a possibility in markets that I'm very have a high conviction on. In fact, if you notice, one of the longest running mining companies in the silver space, in fact, the largest North American silver mining company today, is Hecla. And Hecla has been, it's been, if you notice the trend here, I mean, we've been in a downward trend all the way back to 1980s. Lots of people would look at this and say, why would I ever own these things? And I find it interesting when people mention just because of the past, because something hasn't worked, it's not going to work in the future. I'm not when there's reasons to believe that you can take the contrarian view, you don't want to be contrarian all the time, but when there's, real justifications to take that contrarian point, that's where I think the real money is made. And so I think that's the case here. If you think silver will make new highs and probably go above 50, remember where we're trading in the 80s? We could see that with most securities that are producing that metal. And so if I'm of that view and I looked at this chart and there's a break of a major resistance throughout history, we're talking almost 50 years of a downward trend, and we're breaking that now. And no one has mentioned this. Nobody has mentioned that we just broke a 46-year downward trend in the largest North American silver mining company, and some people think this is unique to this. I do not think this is unique to the security. I think this is coming in all fronts for the whole industry, and so yeah, it's extremely positive to see this. Needless to say. Silver prices going up, as I mentioned before. Silver production going down, as you can see down below. Mexico is what you would call the equivalent of the Saudi Arabia of oil in the silver industry. And I think this is an important chart because if you notice, back in the early 2000s, silver prices began to rise. With a lag, you saw production rising. Now, notice that silver prices have been rising since 2020, and we have not seen the blue line rise at all. Why is that? It's because there's real constraints. I mean, do you know of any major mining project in the silver space that's going to be coming online anytime soon that will change the supply curve of the metal? I don't. And we do know that it takes about 10 years would be very optimistic, 15 years to get something from exploration to production. And so this makes me believe that, we haven't seen much of that mismatch being reflected in markets yet, a mismatch of supply and demand being reflected in markets yet. Copper miners versus Chilean stocks. Well, I've been talking about this next wave of emerging markets, and I was mentioning this to to someone the other day that the same way I've really pivoted. At least I view Crescat as well, but my personal career, I've definitely made a pivot back in 2018, 2019 into precious metals. I think the next pivot here, if it will, and that's not to say that I think precious metals and commodities will lose its way. It's actually an add-on to that view, is that emerging markets are going to do extremely well. And it takes time. It takes time. You need to have the metals and gold and others to do very well. This is happening right now. I think Chilean stocks, which the Chilean economy, and you may say, well, the Chilean ETF and index don't have a lot of Chilean copper mining exposure. Why would you compare with copper miners? It doesn't matter. Inherently, the economy is very much driven by copper and copper prices and the copper cycle overall. In fact, you can see this incredible connection between the two. And recently, we've seen a break of that, and that's been caused by the neglection that happened even further on the emerging markets relative to mining. And I do think it's going to come back. And so that's your potential cheaper, more undervalued way of playing the copper trend that is, in my view, clearly unfolding in front of us. But there are some instruments that are linked to those things that have not reflected that yet as well. You can also look at Brazilian equities, and I've seen this chart. I've looked at this chart in many different ways. You can look at a weekly, daily, log, not logged, and all sorts of things. And I think that the best way to look at this chart, of any chart really, is quarterly. Okay, and we're really on the brink of something here. We've had 3 candles to hit up against that wall of a resistance that has been a very significant resistance over time. And there's a moment where people lose faith, and that's usually they throw in the towel and they say, enough's enough, I'm out of this. That smells to me what's happening with the Brazilian equities. Immediately when you post this, people start talking about Lula and all sorts of things. What they don't see is that Lula is 80 years old, 80 plus years old, and also has cancer. This is not to say that I'm thinking the guy will die. I'm just a natural path of life. And most importantly is that there's nobody behind him. Who is behind him? Who is underneath the guy that will be the next popular candidate to take on his party? I really challenge somebody to tell me who that is. And on the other side, you have all these new emerging people, Tarcísio, the governor of São Paulo, and others, really trying to make a breakout here for elections. And I, see the structural changes in South America. First, you have Argentina, then you have Bolivia, now you have Chile. Guess what? Brazil is next. Elections are going to be next year for presidential elections. I think the market anticipates that. It doesn't wait for the end of it, for the results. And so notice what happened in Argentina. It's a great playbook for this. And I love Argentina as an investment as well. I think that that's an interesting environment because you saw the inflows coming in way before elections. I think that could be the case here. I mean, notice the prior chart. You've seen this movement in Chile. You're kind of missing a little bit of that in here. So why? Because elections in Chile is in November, and Brazil is next November or next year. So I think this is a really interesting a setup for a breakout that would change. And some people like to say, well, I like to wait for the breakout. That's fine. That's on you. I learned from Paul Tudor Jones, the real money is made on really anticipating those breakouts in a big way. That's where the big candle comes. All right. Emerging market currencies, if you notice, okay, well, we haven't broken out yet. Well, look at emerging market currencies. They seem to be leading that already. So we've broken that line, and now we're probably headed much higher, in my opinion. And so this is why I'm extremely bullish in this space. Gold, another thing just to finish on emerging markets that I think is important. This is a chart from gold that ends in January 2024. Do you notice that pattern that you're sort of, really lots of resistance at that line that I just dashed, that dashed line that I put it in the chart. And guess what happened right after that? Boom. That's the big, run up that you have in gold prices that, that was a triple top that people were saying, this is it, we're going to go lower and so forth. And guess what? We didn't. That was potentially the beginning of a cycle. All right. Well, let me show you another thing now. This is something that a lot of people are skeptical, but it's a very similar sort of stubborn line, that we've been sort of in that range, if you will, for some time now, since all the way to the early 2000s. Where do I think we go from here? I think we break, and we're going to probably see something similar to this. And so I'm very bullish in the space, and that's just to say that I love these long consolidation periods because people lose faith, they're not positioned, and then things change. And all my views on the dollar and yields, and they fit perfectly here. This is why I'm excited. All right, railroads. Look at the percentage of ownership of railroads stocks back in 1800s, it was about 63% of the market. And this reminds me of what technology today. And, I don't know how this unravels, to be honest, and I don't think anybody knows. You can claim this could be a burst moment like the tech period in the early 2000s, or you can say that potentially it's going to be a rotation. I want to say that either if it's violent or not, if it's a violent move out of a sector into other parts of the economy, I'm extremely excited about this. You've got spenders, the AI spenders, the infotech guys that have about $30 trillion of market cap and a bunch of, just the Mag 7 alone are with close to $3 trillion of assets and could leverage, a lot of that and finance a lot of the infrastructure we may see in the future. Do not underestimate that. But think about who the earners are, where that money will go to. And I think the earners are energy, infrastructure, and materials. I've said this before. I like those buckets. I think those buckets are going to do. I think the spenders will fund and the earners will compound. That's my opinion. So, we wrote a letter about this. If you're interested, you can go to the website at Crescat.net and read about it. One thing to notice here as well, as we see those rotations happening, right now, it's been a pretty peaceful rotation in the market this year today, right? Markets are up. Nobody's noticing the change, but gold miners are taking the lead. Gold miners are up about 90%, while the entire sector of the S&P 500 is up, but definitely not as up as much as the gold miners, the copper miners, and most of the these metal-related businesses. And so, take note of this. This is not, and if you looked at the gold miners relative to S&P 500, you will notice as well, we are at one of the lowest levels in history, which makes me believe this rotation is just getting started. Now, remember, the mining industry is a blip relative to the size of these other sectors of the economy. And so, we need the mining space if we're going to build AI infrastructure. So keep that in mind. Metals are going to be critical here. One thing I would like to notice, I call this, is a Mar-a-Lago Accord letting yields rise relative to the U.S. to the value of the U.S. dollar. I think that's the case. If you notice, year to date, since Trump took office and this year, you can see we've been seeing a trend across most yields elsewhere in the world versus the U.S. And I think that is, do you think that's a coincidence that we're also seeing one of the worst declines of the dollar since the 1970s? No, it's what supports a currency to move higher is letting yields to rise. And so I think the U.S. is doing this on purpose. I think they are causing other yields to rise relative to the U.S. to force the currency to devalue, because, as I said before, this is an unavoidable policy, in my opinion, to devalue the U.S. dollar versus other fiat currencies. And so think about this. I mean, what's the risk of investing in emerging markets usually? Well, it's if yields are rising in developed economies, especially in the U.S. U.S. is the main thing, or if you have a problem where the dollar is too strong, usually causes emerging markets to be very lots of turmoil, and that's that part of the world. We're probably not going to see a world like that, in my opinion. That's my view. We're going to see a compression of the two. So dollar and yields. And so, consider this as potentially the Mar-a-Lago Accord, in my opinion. All right, guys, that's it. What I have for today. I hope you enjoy the presentation, and leave for Quentin to keep this going. Thank you very much.
Hello, everyone. I am recording this. It seems like I've been traveling almost nonstop lately, which is actually part of an indication that the metal space, the mining space, is really picking up. And it's nice to be back into work and feeling productive. Not that the past few years haven't been, but it's just nice to see the money return and be able to do things here. And one of the more interesting stories I'm going to tell you is actually it relates to this image right in front of us here. I worked for Newmont many years ago, and while I was there, this is a period, we'll call it back in the beginning of the last gold cycle, when, in the early 2000s, when gold was starting to move upwards. Newmont was in an interesting position. They were the largest gold producer on Earth at that time. They were producing, I think, just over 7 million ounces by around 2004, plus or minus, if my memory is correct. And we were looking around the world for, major deposits like tier one assets, million ounce type producers, things that could generate 1 million ounces plus. And one of the analogs that we looked at, one of the types of deposits we looked at, was Marun in Uzbekistan. We had a joint venture with the Uzbek government during that time period. It was processing mainly the tails because Newmont had metallurgical expertise. But we got to know the deposit. We learned a lot about it. And it was a very unique deposit, very large scale deposit, something like 200 million ounces. And they've been producing plus or minus about 2 million ounces per year. And it's still going. I mean, this mine is just a tremendous deposit. So we looked around the world, where else could we find a Marin town? And I'm going to tell you a story today that basically mimics this. Okay, it's not exactly the same, but it's similar. And the reason I have this image in front of us is because this deposit, its style, its geometry, is very unique, and it reminds me of poker chips in a poker tray. Basically, loads of mineralization that are stacked one next to another in in a series of parallel poker chips, we'll call it. And what is this? Well, I'm not going to spoil it just yet. Let me tell you a little bit more about background. Okay, Newmont owned a mine up in Canada many years ago in the 30s, 40s, and 50s, and they were mining high-grade gold. In fact, they were mining these little pencil-like or pipe cleaner-like high-grade ore bodies. They were like little tubes, and as they were mining down, a lot of the people there noticed that they were going through lodes, one after another, lower grade, but significant loads, quartz veins or quartz vein stockworks, and that they were just repetitive, one after another. So as they were mining down these tube-like things, they identified these poker chips. Now, I worked at Newmont, and they shoved me because I was a little bit goofy. I think they pushed me way back in the back. So my cubicle at Newmont, I kid you not, was in the library. And I had access to all the historic data files from Newmont. So I had access to the files from this mine in Canada that date way back to the 1930s. And every time, every lunch that I had at a moment, I would open up files and read through these reports. And I remember reading this particular tale of Newmont mining this deposit in Canada, mining these high-grade pipes, and identifying these repetitive loads, these poker chips. And I thought it was absolutely fascinating. And it was right at the same time we were pursuing the Marun analog. We were trying to chase that. And I brought it to people's attention. We actually looked very hard at this asset back in the day. Couldn't make any progress with that at the time, but it really stuck with me. And now I'm going to fast forward to today. This asset, it went through a kind of a dark period around 2012, I think, when there was a resource published on it, which was, we'll call it, very speculative, very unconventional, we'll call it. And, the exchange halted the company. It was a grandiose resource that really didn't have any, data to underpin it. And so, the exchange called foul, and the company was basically ceased traded, I think, for a period. I can't remember all the details, but long story short, Eric Sprott gave the company a convertible loan. And at some point that loan converted because, subsequent years, 2013, 2014, 2015, they were a dark period in the gold space. Anyway, Eric ended up owning this asset. And then he vended it into the hands of some very capable, competent people. It took the people that bought it a little while to get comfortable with this asset because the geology is very unusual. these poker chip, this poker chip style, very unusual. And they weren't certain they could work with the data. Like, could it be drilled? There were some questions. Nonetheless, given their very savvy approach, this group took this project on and have now advanced it to what I think is going to be the most remarkable new gold mine in Canada. So let's plow in. Go to the next slide. Okay, I'm going to talk about Osisko development today. This is the Caribou district, the Barkerville camp, I should say. And we're going to talk about this Caribou mine that is going to now go into production. It's been funded recently. It's full steam ahead. Let's go to the next slide. Okay, a little data here. You can see the shares out, et cetera. I'm not going to read off all of this, but what I am going to point out is that the company recently did finance the mine build at Caribou. Okay, this is a big step. They have a debt package along with an equity raise that was recently closed, and they are now in a position where they can advance the development of this asset. I have known Sean Rosen for quite some time. I've known Chris Lauder for even longer, and I have a lot of respect for both guys. We'll talk about that more in a minute. But I got a call at random. Can't remember exactly why. It was late April this year, and I was talking with Sean, and he gave me a full update. I remember it was in the evening. I spent probably the better part of 2 hours talking with him. He gave me a full update on where they were at with the technical work and the economics that they were starting to see for a feasibility study they had nearly completed at that time. And I thought, gee, I want to see this, because this poker chip deposit has been in my mind, like my Rolodex of opportunities for many years now. And I really wanted to see the progress they made. So I hooked up with Chris Lauder, who's their president, very smart geologist, good friend of mine, and we went up to site in early May. I saw the work they did. I was absolutely blown away. Okay, so one of the things that really was a twist to all this, we have a shareholder at Crescat. I'm not going to name names. He's also a shareholder of San Cristobal. Okay, and I know the gentleman, a really nice guy, just a super nice guy. And although he deals mainly in the crypto space, he has kind of a passion around gold mining and such. So I kind of emailed him. I said, "Oh my goodness, there's an opportunity here to invest in a development stage gold asset." He got very interested. Long story short, took a little while, but once Osisko Development put their debt finance package together and were ready to do their equity finance, I did bring this gentleman to site, and we had a very good visit. This was late July, and he actually was the lead order and is now the largest shareholder in Osisko Development. I think it's a delightful outcome, because I think as this company goes along, this might be a very rewarding investment for him. But it was a nice way to be a part of the story, is to help bring that lead order for the equity component. Anyway, I'll set that aside. Let's plow forward. Okay, Sean is quite famous, as everyone knows, in the mining space. He was the captain of the ship with the whole Malartic development, incredibly successful mine build. Today, it's I think the largest. Well, I don't know if it's bigger than Detour, I can't remember, but it's either first largest or second largest gold producer in Canada. It has a long future ahead of it. They're finding more and more ore. It just goes on forever. But it all started with Sean and his vision. So kudos to him. I've known Sean for many years, and I have a tremendous amount of respect for the guy. Chris Lauder, who you can see second on the list here, he's the president of Osisko Development. Chris was working for Anglo Gold Ashanti, I believe, around the time I was working at Newmont. And I think I can't remember exactly, sometime in that period, I got to know Chris. Probably one of the brightest geologists I know in this industry. And he really has the kind of the mental capacity to deal with a very complicated deposit like this. So he's really the key to help, or he was the one who helped unlock the value that we're going to see here. Okay, I'm going to fast forward. I don't have a lot of time today, but we have a really strong board over here on the right. I'll point that out. Don't want to skip that, but let's go to the next slide. Okay, what are we talking about? Caribou. Okay, Caribou is basically the name of the project, but it is in the Barkerville district. This is in East Central BC. It is a very interesting deposit. Okay, and you might say, well, why would I? I'm typically an exploration guy. Why would I get interested in it? Wait till I show you the last 3 slides. You'll see, and it'll just blow your mind. I'll bring this thing full circle. Okay, so it is a linear mineralized trend. This is an orogenic gold system, but it's a unique gold system, and it's big. Okay, right now they have proven and probable reserves totaling a little over 2 million ounces. Notice that with measured, indicated, and inferred down there at the bottom, there's a bit over 3.5 million ounces additional. Okay, so we're really talking about 5.5 million ounces inventory here, something like that. That's a huge project, in any space, but it could be bigger. Okay, we'll talk about that at the end. Okay, let's go to the next slide. All right, here's our poker chips. Now, if you look at the profile of this deposit, this is really just looking at a small segment, about 4 kilometers long, profile of the existing lodes. You can see they're just stacked up like poker chips there. Okay, and the red areas are basically the proven, probable, and the resource. All of them are presented as the red poker chips. Those are individual lodes that are just stacked one next to another. Just repeat. It's like somebody took a meat cleaver and just sliced up the rock and injected these lodes into this area. Now, these things project to depth. Okay, the light tan color that you see there is down dip projection on these lodes. How far does it go? I don't know, but we know, here's a real key factor, that there's a certain strata, a certain unit of rock in here that broke nicely. It broke to form this pattern. My hunch is it doesn't go on forever, but it'll be like, think of it like a long Tootsie Roll, okay? Basically, the rock got folded up think of it like a long cinnamon roll. When you roll out cinnamon rolls and you roll it up, and then it was just chop, like that, okay? That is what we're dealing with here. Okay, it's a very complicated deposit if you think about it. Like, that is unusual. Usually, veins are like long linear things. This is not. This is just a bunch of these lodes that are stacked one next to another. There's some places where there's apparent gaps. Those gaps are not necessarily real gaps. They're just areas where there's further exploration potential, or perhaps because they have some infrastructure going in, they haven't quite decided to bring additional resource in that area because they're going to need to preserve that infrastructure. But anyway, the long story short, this thing is a long, continuous thing. Does it go on in either direction? Absolutely. This thing will go on for many, many kilometers. Okay, let's go to the next slide. Now, let's take a close-up view. Now, the company spent a lot of money and a lot of time over the period from, I think, around 2016 till, say, early 2020s, drilling. Why? Because you have to test zillions of these poker chips. Imagine drilling hundreds and hundreds and hundreds of holes to understand these poker chips. And this is where they're at presently. What you see here in the blue and the pink is basically the reserve, which is pink, and the resources, which are blue. Okay, and you can see they're linear things. Yes, there's little gaps and stuff. Why are there gaps? Because they don't have any drilling in there yet, but they have enough definition, enough drilling at present to actually come up with reserves, which are the pink blobs, or the pinkish purple, and the resources, which are the blue. Okay, now they've also put a decline down and they've drifted along this thing, and they've actually opened up some of these things so you can actually see them. And that was what I wanted to see back in May. I wanted to see this, this stuff that I read about, 20 years ago in Newmont files from the 1930s about these poker chips. I wanted to see these things firsthand, and I got to see them. Okay, it was very exciting. And as soon as I went underground, I said, yes, this thing is going to work. This thing is an absolute killer of a deposit. Does it mean there's, is that all you're going to get in there? Is these kind of little flaky poker chips? No, they're going to continue. You're going to see continuity of the poker chips, in my view, a lot more continuity. There's basically a lot of gold hiding in plain sight in the gaps that you see there. Okay, it's just that the gaps are where they have drilling right now. That's fine. That's fine. You can start a mine, build a mine. Let's go. Let's go to the next slide. Okay, so here are poker chips underground. Now, these photographs come out of their slide presentation. And what we're looking at is basically these loads are basically cored by either one predominant quartz vein or a series of stockwork veins over a width of a few meters, and they project a long strike. So this is the poker chip. We're looking at the poker chips on end. Think of it like that. And these things, they might have a linear dimension of a few tens of meters to maybe 100, 150 meters, something like that. They also extend vertically. Okay, how far down do they go? We don't know yet, but they're probably open at depth. But you can see they're actually discernible poker chips. Each image there, boom, boom, boom. That's what they're going to go mine. Okay, now is there ore between the poker chips? Yeah, there is low grade. And that's really interesting because in any other place in the world, you'd probably just mine this thing as a large open pit. But here at this project, they are going to mine these poker chips individually underground, and they're going to go after the highest grade. Okay, let's go to the next slide. Okay, what's represented on this slide is basically to illustrate, to inform people of the insights that the company gathered as they drilled this thing, as they defined these poker chip-like ore bodies, and what they learned about the grade, what the mineable grade is going to be. Once they mine the entire poker chip to the fully diluted width, it's not super high grade. The veins in yellow or bronze here are, they often run 5, 10, 20 grams, the actual quartz load, and the gold is associated with pyrite in those. Okay, the gold is very closely tied with pyrite, and in between there, the dark gray, that's sandstone. Okay, that's the wall rock. That's a country rock. And it carries a little bit of gold, but it's mostly waste. Okay, so you have these poker chips, which are basically these zones of a mix of quartz and pyrite and sandstone. All right, what does that mean? Well, they've now proven they can mine it. They've done test mining. They've shown they can mine out stopes and at big tonnage too. I mean, these are bulk underground type stopes. The grade that they produce down there at the bottom, you can see results around 3.62 grams per ton. Not super high, but guess what they're going to do? Okay, this is brilliant. I just absolutely love this. They're going to put the material, after crushing, they'll put it through ore sorters. That will upgrade the material. They're going to screen out the fines, of course, but they'll upgrade the resulting material up significantly, combine them, and that gives them with a mill feed grade of 5 grams. Okay, so they take it from 3.6 grams, reduce the mass. They're basically filtering out a lot of those sandstone fragments, and they're upgrading the quartz pyrite material with the gold, and they end up with a feed grade of 5 grams that goes into the mill. That's pretty good. Okay, and yes, we get gravity gold recovery as well as a flotation concentrate that's very high grade, 133 gram per ton flotation concentrate. That's their product. Okay, they're going to produce some doré out of the gravity, and they'll produce a lot of pyrite gold concentrate that they can ship overseas. It's 133 grams, marketable anywhere on planet Earth. Okay, that's very good stuff. Let's go to the next slide. This simply shows the flow sheet for the whole thing. If you guys want to do a deep dive, I would suggest going to the website, downloading the presentation, and looking at this. But you can see they're going to crush it underground, bring it up, screen it, take the fines, of course, directly, but then they're going to ore sort the coarser material, put it through the ball mill. They go through the gravity circuit over there on the right, boop, 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 to produce doré, and then the flotation circuit more on the left here, which basically produces a very high-grade pyrite concentrate. It's a brilliant scheme. They get 92.6% recovery. A lot of that is gravity recovery, 46%, so about half of it is gravity recovery. It is a fantastic metallurgical scheme. Let's go to the next slide. Okay, so they came out with a feasibility study back in, I think this was announced in May, or I might be off, maybe it was June, I can't remember. But really, really robust economics. And remember, they're only starting with a reserve of around 2 million ounces. They have another 3.5 million ounces in resources that will likely be pulled in, or a lot of that will be pulled in. But right now, they're starting with a base case of 2 million ounces. Is that all there is? No way. It's way bigger. Okay, but this base case generates 190,000 ounces of gold per year on average over the life of mine. And in the first few years, the first 5 years, it's 202,000 ounces. So this is a significant gold producer. Can it be scaled? Yes. I'll tell you why. We'll save that punchline for the end. Notice the all-in sustaining costs. US 1157. Let's see, where's gold right now? 3,500. You think that'll make decent money? This is a robust operation, guys. This looks very good, very competitive. I think that would put it in the upper quartile of, or the lowest quartile, I should say, on the cost curve. All right, this is really interesting. Down here in the lower left, you could see that at a 5% discount at $2,400 gold, this is just under $1 billion now. But look over here at 3,300. It's a little over 2 billion. That's interesting. Okay, that's very good. Right now, it's a 10-year mine life. Will it be longer? Yes, I think this thing will be mined after we're all dead and gone, quite frankly. What's the initial capex? 652, right there in the middle. Okay, 652 American or US. Guess what? They got 450 of that from the debt facility through Appian, and that equity raise, including my good friend, brought in another 200 million. So they have the money they need. They can go. You know, that's one of the things that gets the companies going out of the Lassonde curve. The bottom of the trough is financing. Okay, to be frank. All right, let's go. Let's see. Sorry, Trevor. One more thing. Go back for just a jiffy there. Okay. You can see right now that they are on fast track. They have full permits, guys. This is important. And this is what really convinced me. Time to step up and make this thing happen. We got gold prices moving up. We got a fully permitted development story, one of the few in Canada. Very large scale. It's time to go. Okay, you can see they have plans to get this thing in production fast track the latter part of 2027. Super. Let's go to the next slide now. Okay, so here's just a picture of how the equity financing and the debt came together. Again, 203 million came from my good friend and others as an equity financing, and then 450 came from Appian as a debt facility. Like, I know the guys at Appian, very smart people, like technically super smart guys. Met them in London a couple of years ago. They don't put money into projects they don't review to the nth degree, and they feel very comfortable about this. So knowing a good technical lender is behind this, who understands this project, absolutely critical here. Okay, now I even personally, I am a firm believer in this, and I was part of the financing, just for full disclosure. So let's go to the next slide. Trevor, there we go. All right. I promised I wouldn't promote this too much, but this slide is in their deck. It just shows the way valuations can appreciate on the back of getting financed and then moving towards development. Over there in the upper right corner, I stuck in the Lassonde curve. So basically, we're in that little trough on the right-hand side, and we're now, with luck, we'll move out of that trough, and we'll see value created as this thing is financed and developed. So I think, quite frankly, that it's gone from cloudy skies to full-on sunny blue skies as far as this company and this project's concerned. All right, let's go to the next slide. Okay, this is where a guy like me gets super excited. Okay, now I've modified this a little bit by putting the red rectangle down there and the purple rectangle down there. Now, why? Okay, everything I've talked about, the whole concept around geology and the pyrite quartz veins and all of that fits in that red box. Okay, so that's about 4 kilometer strike, and that's where the current resources. So we know there's 2 million ounces of reserve and 3.5 million ounces of resource. We know that those continue down into the ground a ways. Maybe there's another 50%, maybe there's 100% at depth. Okay, so maybe we have something more like 7 million or 10 million ounces inside that red box. That's cool. Okay, but look at the purple box. Okay, the purple box is another 10 kilometer strike beyond that. That's another 2.5x. Now, do we know that there's loads like this out along strike? We know that the historic miners, the old timers, they went in certain areas and they found these poker chips. Yes, we know they're out there. Okay, but they haven't been drilled yet. Okay, so the companies, they've stuck to their knitting. They're going to make a mine. And this is what I love. I love companies that build a mine, but they know there's a lot more in hand. Okay, they're going to focus on developing Caribou. very robust operation, and then they're going to start exploring out and out and out. How much gold could fit in there? Well, I just told you in the red box, maybe there's 7-10 million ounces, something like that, total on top of the 2 million ounces of reserves and 3.5 million ounces of resource. Okay, add that, 2.5 times again right there. That gets interesting. This could be a 30 million ounces. I'm not saying there's any promises here. It's just in terms of my brain and my target concept here, this is a lot of gold. There's a very good gold potential along strike. Now you might say, why did I write that piece? Just criticizing the resource that came out back in 2012, and you can Google it. You can see me and Peter George and Frank Callahan. We had a very interesting dialogue on the internet back in the day. I criticized because they didn't have the data to back it up. Okay, so they were basically already saying they had 90 million ounces or something crazy with no data to support it. That's not correct. That's not the way the world works. Okay, but fast forward, we now have technical people in here who've done a great job. Chris Lauder and his team absolutely knocked it out of the park, and now they can show us, like, for real, what is here. Okay, now I feel more comfortable talking about the potential of this district. I like big things. This is big. Do you think if there's this much gold here, this mine would stay at 190,000 ounces average per year? I don't think so. I think this is a deposit, given the size and the scope of it, that can be ramped up over time. What could it be? Well, I told you at the beginning, Maruntal was an analog. I'm liking this. Okay, I can't guarantee you anything, but I really like the concept that there could be something that's tens of millions of ounces. Now let's go to the next slide, the last slide here. Okay, so again, I took a red box and I took a purple box and I put it over here and annotated their this slide, which came out of their deck. Okay, the gray oval on the northeast side there, the upper right, that is basically the main Caribou trend. Okay. The red is where they're going to go mining. The purple box is that additional 10 kilometers, say, but they have a lot more than that. Okay, this thing continues along strike. Do we know if there's loads to the southeast and to the northwest? Look, there's a lot of workings. There's a lot of alluvial gold that comes out of all of those creeks. So every single creek that sheds this area has lots of placer gold. My hunch is yes. Okay. And if so, that means you probably have something that's more like 40 kilometers there that could be explored, and that's going to be way beyond our lifetime. So quite frankly, if anybody finds this video in about 100 years, they'll look back and say, oh, that guy was a complete idiot, or, oh my God, he was brilliant. I don't know which. Anyway, funny. Look, the other thing is they've also identified a new parallel trend. More speculative, but it is the same kind of geology. It's essentially another Tootsie Roll or poker chip tray that goes on down there. Lots of alluvial gold there too. But the key takeaway, this is an absolutely enormous story that while it starts as a modest scale mine, 200,000 ounces per year, it's funny saying that, 200,000 ounces, but that's actually a big mine. Come on. But it could grow. Okay, this thing, the geology's there. It's conducive for potentially a much, much larger operation should all the pieces come together. All right, last piece, very important. Go to the next slide. People. Okay, one of the things that blew me away about going to Caribou back in May was meeting all of the young team members that Chris and Sean have put together to build this mine. These guys are really cool. I mean, these are guys and gals in their late 20s up to their maybe mid 40s. Okay, we're not talking about old farts like myself or Chris or Sean or something. They have put together a really cool team of very sophisticated scientists, geologists, engineers, environmental scientists, et cetera, that are going to make this happen. And this is one of the keys that really gave me comfort that they could pull this off. Without taking a lot of time here, I got to know a lot of these young folks. And, for example, over here on the right-hand side, Peter with the white hat on there, he is a young lad. I don't know exactly how old he is. I think 35, maybe 40. I don't know. But he has bulk underground mining experience. And I asked Peter point blank, I said, are you going to make this a mine? Absolutely. He didn't even flinch. He said, we've got this one down. That was what gave me comfort. It gave my investor comfort. By the way, that photo at the bottom center, there's Sean on the left, and then Chris Lauder's over there on the right, and then my good friend in the yellow vest is in the middle there. But again, he's a crypto investor, but he fell in love with the gold space, and now I hope he does extremely well out of this story as they develop this mine. Stay tuned. Let's go to the next slide. We have an absolute plethora of news to go through, and I got to put my skates on because I don't have that much time. So we're going to talk about the cornucopia of drill information that's come out recently and updates. Let's go to the next slide. Okay, Sitka came out with some more results. They have a ton of drill holes. I think if you read these bullets down there at the bottom, 55 drill holes are pending. Okay, yes, the labs are getting backed up again. Oh boy, this is going to be fun. So we have literally hundreds of thousands of meters being drilled across Western Canada, and yes, the labs are going to be chocker full of core, but that's life. Anyway, we got good results here: 145 meters, 0.92 grams. But we also have some interesting results out of the saddle area too. I'm going to just touch on this briefly. Go to the next slide. Okay, so in the upper left here, you can see drilling at Blackjack. This is the main resource area. The older holes are kind of faded colors there, light colors, and you can see that the gold coincides quite well with the granite or the porphyritic granodiorite intrusion that's there. And you can see even the geometry is starting to get clarified. Like you can see, it used to be just straight lines of pink, and now they've got real shape to them, which is interesting. Okay, now we have new holes that are shown in darker colors there. Those are interesting because they're actually out in the wall rock. They're in the schist adjoining the intrusion. Okay, and what this means is that in a pit, like if you develop a pit on that resource, which is largely focused around the higher grade in the pink, that means you got a lot of potential ore, potential mineralization outside of that, but still within the pit. These are actually very, very good numbers, especially in the gold price environment we have. So this is important data. It tells us that that's not waste rock. It is potentially ore in this story. Okay, that's a big plus. Now, this slide or image on the lower right, this comes out of the saddle zone, which is a little bit to the east, just immediately to the east of Blackjack. And you can see they found another intrusion there. And lo and behold, that thing generates pretty good results. Now, they quote 34.4 meters and 1.47 gram, but inside of that, very sharply coincident with the intrusion, guess what? There's the high grade. Okay, that's really interesting. That means between Blackjack and Eiger, which is further east still, we have a zone of gold that's starting to develop. And this is how these pictures emerge. You got Blackjack, you got Eiger, and this little gold system starting to evolve between them. How are they all going to connect together? I don't know exactly yet, but it's good because there's a lot more happening here. So good on them. Go to the next slide. Tectonic, after a long waited update or wait for an update, they went absolutely full on this week, putting out a virtual drill core shack. And they had a video, I think it was done yesterday. I was on a plane coming back from Bolivia, so I didn't get to see it. But I've been through the reports, and I think they've done a very good job in trying to convey to the market what they've seen here. Okay, and I think it's looking quite positive. They don't have assays to throw at us yet, but the pictures I've seen and the scattering of the drill holes, tells me they're onto something. Okay, let's go to the next slide. Okay, now I don't have time to go through their whole presentation, which is literally tens of pages long, but what they did is they basically took little images and showed each drill hole. Okay, they show with a yellow circle where the drill hole is located, and then they have core photos that correspond to that drill hole. And it's very informative. Like you can look and say, yeah, sheeted veining. Look, it's an intrusive. Oh, there's VG. Okay. And you can look back to where that drill hole is, and it gives people a pretty good insight into what's going on here. Good on them. Okay, go to the next slide. Now, I'm not going to read through all these bullets, okay, but this is a summary of their phase one drilling. Basically, they've broken it down. The early part of the summer, phase one, They drilled something like a little less than 8,000 meters at Alpha Bowl, Chicken Mountain, and Golden Apex. So they basically tested 3 areas here. They outlined their target, their the reasoning for testing each area, and the details. And what I will say is that Alpha Bowl, they have seen more veining. Okay, last year, remember, they got that one hole in, hit gold. What do they have now? They got a bunch of holes that look very interesting. No assays yet, but man, looks good. Chicken Mountain, they drilled some metallurgical holes. That's great. We already know that there's a lot of gold there. Now they have some more material to work with for metallurgical purposes. Golden Apex, this is a new target way up in the north. They drilled a hole there. It looks darned interesting. Look at the core photos. I don't have time to go through it today, but look at the core photos. Hopefully they put a recording up of that video they did yesterday, and everybody can kind of get up to speed. Let's go to the next slide. Okay, here's the total meterage. You can see they drilled 7,718 meters. Most of it was Alpha Bowl. That's a good sign. Usually you keep drilling if you see stuff, and they drilled quite a bit there. They did drill some at Chicken Mountain, then they had one-off tests in these other targets. Let's see what they hit, okay? Now, looking ahead, this is important. Remember, the company recently got a great deal of financing, and they are going ahead with phase 2 drilling. And much of that's going to be centered at Chicken Mountain. Why? Because they want to put together a maiden inferred resource. Fine with me, because as the exploration data comes back from these other targets, that seems like a reasonable strategy. Get in there and see if they can put together a gold resource. What the timing on that might be, I don't know. One thing I would encourage the company is don't announce a resource before it's time. In other words, if you see that you're onto something and you need another year to drill, well, use another year to drill, and don't put your resource out until, like, look at Snowline. They did a great job. They drilled it systematically and came out with just a knock your socks out kind of resource. I think they're also going to follow up at Alpha Bowl. Obviously, they have to get assays from those holes that they drilled, all those 2,800 meters they drilled. Or no, they got some RC in there too, 1,700 meters of RC. And they got to get those assays. But if those look good, they're going to follow up at Alpha Bowl too. All right. And that will start immediately. I think they've already actually started phase 2. Let's go to the next slide. Goliath, oh my gosh, they talked about seeing this really interesting drill intercept, and I can't remember, like it was 3 or 4, maybe 5 weeks ago. It seems like time's flying, and lo and behold, they absolutely shot the lights out. Okay, so 10.62 grams over 22.82 meters. That's a whopper intercept. So around 250 gram meters. All of the holes that they're seeing, I should say most of the holes are seeing VGA, but all of the holes display mineralization thus far in this program. Remember, they have a lot of data to work with, and now they're going back in and they're kind of focusing on the areas of higher grade and making sure they get across those loads. And it's with great success. I mean, this is phenomenal. If you look at the actual breakdown, there are some higher grade portions of this. I think there's some sub intervals that are announced plus inside of that 22 meter, but just amazing results. Go to the next slide. And the other thing they put out recently, I think, 1st of September, and I would urge people to go look at it, it's on their website, is this presentation that really kind of breaks down the Sherbet discovery, and it shows in a pictorial way what they've accomplished so far. I think it's absolutely amazing. I don't have time to go through about 100 slides here on the video, but for those of you who want to do a deep dive into the Sherbet, I really urge you to look at this preso. Okay, go to the next slide. The one thing I will say is that you can see the model they have so far with all of those loads, the green, the yellow, the purple, et cetera. Those are all the different loads they've identified so far. And this thing is still growing, okay? So think about where we were in 2021. We knew a little bit about the upper part of Sherbet. Think about what you see here. This is astonishing. These guys have really seen this thing come together. It's still open in many directions. Don't forget, there's probably a feeder down there somewhere. Yes, we know the dikes and such that came off are also mineralized. But right now, you can see a system that they're starting to really wrap their minds around and understand, and it is absolutely enormous. You go to the next slide. Altamira came out with some visuals this week and also some results from Tavares Norte. So at Maria Bonita, They started drilling. They actually started with a deep hole, and I think it looks fantastic. But at Tavares Norte, they found some really good results too. Let's talk about this. Go to the next slide. Okay, for a refresh, this is a Cajueiro project. It's basically a huge area. Like you can see the scale bar, 2 kilometers. I mean, this thing's like 15, 18 kilometers from east-west or something, and 10 kilometers north-south. It's huge. All of these soils tell us there are just innumerable centers of gold popping up in this area, lots of alluvial gold, and they've really only started. But Maria Bonita, that was our original investment thesis up there in the upper left, is yielding some really interesting results. We're going to talk about that here on the next slide. But then Tavares Norte, which is kind of the upper center part there, that's also kicking off some really interesting results. I was with Mike Bennett. I saw him. He lives in Bolivia, believe it or not. So I stopped and saw him. When I went through Santa Cruz, I got to talk to him firsthand about this and the excitement he has. This is looking like a potential world-class gold system in every respect. Go to the next slide. Okay, here you can see, this is Maria Bonita. This is some of the original drilling, which was shallow. Okay, look at the holes up at the top there. They got, 59 meters, a half gram, 139 meters, a half gram, and then 213 meters, 0.8 gram. This is good results, all right? But look at that big hole. Okay, so the big hole is what they just finished. And notice, most of that is in the same quartz porphyry that was seen up above. Okay, what are we going to hit in there? Well, that's probably two times and a bit longer. I don't know, 400 meters and change. I don't know, something like that, compared to the next hole above. Could we see a very long interval of interesting gold here? You'll probably, because most of that quartz porphyry is veined, just like you see here on the right. Okay, that's a huge volume of rock, guys. We went from, like a little perceived gold system up above, and thank you, Mike, drilling a deep hole to show this thing is huge. Okay, when we start talking about that kind of length and then the volume of rock, you start looking around, this could get crazy quick. Okay, so very, very good potential. They're doing the right thing here by drilling that deep hole and showing the world, hopefully when the gold assays come back, showing the world this is amazing. Okay, let's go to the next slide. All right, at this Tavares Norte, and there's also this Mora Verde target immediately to the east. First of all, look at the scale. There's a half kilometer down there in the lower left. Okay, so Tavares Norte is a kilometer across. They're seeing alteration that is more typical of what we would call, porphyry style alteration. In other words, they're seeing phyllic and sericitic alteration. Don't worry about the technical aspect, but just understand that they've basically identified another porphyry here. Okay, I think like they call it a cyanogranite intrusion. Okay, whatever. It's too technical for most folks, but basically it's another teat on the udder. Okay, think of it this way. This is upside down cow. Here we found another one. All right, and it's big. Okay, that thing is a robust target. What's really interesting is that sample on the right yielded 27.5 gram per ton gold, along with anomalous copper, which is interesting. And it looks a heck of a lot like, if you just kind of filter out the oranginess to that, it looks like that is probably the same kind of porphyritic stuff that we saw at Maria Bonita, but more mineralized. Okay, is that a bad thing? No, this is amazing. Okay, what's there? I don't know. I mean, this is exciting. They're gonna, I talked to Mike. He's very excited. He's gonna prioritize drilling here. Yes, they will swing a couple of drill holes in this area as soon as they can. Let's go to the next slide. Now we're gonna have to talk about the Yukon. So we're just flying all over the earth. Yukon Metals, they have multiple targets they're drilling this year. We went to the AZ project back in early July, and I saw that. And then they're drilling at Star River, which is more of a base metal silver or high grade silver play, I should say. But they also had this Birch copper gold project, and really this was just defined by a soil anomaly prior to this field season. Yes, they knew there was scar in there, but didn't really have a clear understanding of what this target might be. Nonetheless, they drilled it. They drilled this soil anomaly, and it came up with very interesting results here. Let's go to the next slide. They have not got assays. By the way, Altamira didn't have assays, and these guys don't have assays yet. So a lot of what I'm telling you guys is about holes that are in the lab. Tectonic, we don't know yet. The holes are in the lab. A lot of the Sitka holes in the lab. Blah blah blah. Okay, we have to wait. We have to be patient. But what they can see in these holes is very darn interesting. So you can see the holes where they're scattered across this soil anomaly that's expressed as copper. Okay, the pink is obviously higher grade, 2,000 to 2,400 ppm. These holes now have answered the question, what generated this anomaly? Let's look at the next slide. All right, you can see in this core that we've hit some variable colored rock. Okay, now the white rock down there at the bottom, that's what we call marble. That's recrystallized limestone. Very beautiful color, by the way. That could actually be ornamental limestone or marble. That's beautiful stuff. But the dark greens and the blacks up there at the top are what we call skarn. They're basically, it's marble that's been cooked up by heat and fluid that has come off of the intrusion. And along with that heat and fluid that comes off the intrusion somewhere nearby, we don't know where it is, comes metal. Okay, and they see a lot of sulfide in these skarn intercepts. So basically, this initial round of drilling has seen lots of skarn intercepts. They're kind of like stacked, like there's a Christmas tree of skarn layers inside of this marble that they've encountered. What do we know? We don't know the assays yet. We got to sit tight, but given the copper gold that they've seen at surface, hopefully we see some really good numbers. Very exciting news. Let's go to the next slide. Newfound. Okay, people ask me about Newfound all the time. They say, well, it's also on the right-hand side of the Lassonde curve. Yes, it is. And they also added a technical team, development team here in the past few months, which will shoot the LITAC. Keith and Boyle and all of these, Paul Hewitt and stuff, they know how to build mines, okay? And they are doing the technical work now that needs to be done to advance this project to production. Little bits of data are coming through on a routine basis now. Now, I'm making this recording early morning Friday. Just noticed it came out with a release. Guess what? They're going to combine with Maritime and pick up that mill. Oh, thank God! That couldn't have happened fast enough. Anyway, that gives them a fast path to basically access a mill. But more importantly, they now know that the rock, the sulfide rock, which everybody kind of scratched their head and, well, can you do anything with this? Yes, they can produce a flotation concentrate. Nearly 90% of the gold is recovered into a flotation concentrate. Again, that will be high grade and easily saleable anywhere on Earth. Okay, so this is a very important step. Go to the next slide. Okay, Onyx. Onyx released some results from Monroe Crisis here this past week or two, I think, and good results. Very, very long intercepts of which showed bulk tonnage potential of gold mineralization. And this is right in the heart of the Timmins camp. Why is this so important? Well, Timmins is kind of going through a rebirth right now. You have what are they called? Silver Discovery or Discovery Silver. Sorry, Tony coming back, back to his roots here, and kind of picking up the pieces at Timmins, really, and making Timmins, we'll call it make Timmins great again. And Onyx has made a discovery now right in the heart of the Timmins camp, which is really interesting. Okay, so go to the next slide. I think this is fantastic. Okay, you can see Onyx's property here. Down there towards the bottom of this image, that's the Porcupine-Dester Fault. That's the main structural corridor that goes through here. The Golden Highway is that big blob down there. It's a bit over 10 million ounces. Then you got Garrison over there. But see that Fen Gib? That's kind of in the middle or just to the left of the middle. 4.4 million ounces just outside of their property. But do you think Onyx might be onto something similar? Yeah. They're on a secondary. They're on secondary structures coming off the main break here. But I think the drill data that we've seen so far tells us that there's potential here for a very large gold system to be found. Multi-million ounce system. Now, we are. When I say we're right in the middle of the Timmins camp, I think about the big picture. Yes, we're east of Timmins a fair ways. Yeah, you can see in the upper right-hand corner there, Timmins is on the left. But still, we're in the heart of that gold camp. Okay, we're in along the Porcupine-Dester Break in an area that's known for hosting multi-million ounce deposits. And knowing that there's appetite, or there'll probably soon be appetite for M&A in this area, this is a good outcome. Let's go to the next slide. And this shows you some of the drilling they've got. They've got some new lithologies popping up along with this Prestone Fault corridor. And basically what they're showing here is they've got a very large area that they can explore, and they're seeing results. Won't go through all the results here, but you can see this target's wide open, and then you step across that offsetting fault on the left, and the system has gold over there and is wide open in that direction. This is what you need. Look at the scale bar, 100 meters. This is probably about 1.5 kilometers or 2 across. That's what you need for a multi-million ounce gold deposit. So they have the footprint necessary. Let's go to the next slide. Okay, Hannon put out some surface data from Provisto. They did announce early results from Bellin, I believe, a week or two ago. They did not hit a home run there, probably a bit high in the system in some of that drilling that they've done. I'm still betting on Provisto. Okay, Provisto is the one that gets me really excited because this is a large alkaline system, and now they've expanded this by 2.1 kilometers through soils and other work. And this one is the one that in my view, is going to be the world-class project that Hannon holds. Okay, go to the next slide. And why do I say that? Well, this is an interesting slide. They did a really interesting comparison here. Over here on the right, that's a diagram of the Cripple Creek district. So basically the dashed line that you see there, that's the footprint of the Cripple Creek complex. And you can get a sense of the scale compared to what they found over here via soils and trenching and other work. It's similar in scope, okay? And Cripple Creek, as we know, I think total mined and resources around 29 million ounces, or 20, what does it say? Gold endowment today, 27 to 30 million, somewhere in that range. All right, could that be over here at Provisto? I get the right vibe, okay? No guarantees, but I really think they have something of the scale of a Cripple Creek type alkaline discovery there. All right, so I'm sticking around for that puppy right there. Can't wait to see them get in and drill this. Go to the next slide. I might have hit the end here. If I did, I will bid everybody adieu. We're going to Beaver Creek next week, of course. So there's no Prezzo on next Friday anyway, because we alternate every other week now. But we'll talk to a lot of companies, and I'm sure there's going to be a lot of news come out, guys. So thanks, everybody. We'll see you guys later. Take care.
Okay, thank you, Quentin. We encourage everyone who's interested in learning more about our strategies to reach out to Merrick Iwahashi. He's head of our investor relations, and his contact information is right here on the screen now. Go to our website, check out our materials there, but reach out to Merrick if you're interested in learning more. That's it for today. We'll see you again in 2 weeks. Oh, by the way, and maybe Tavi and Quentin have already mentioned it, but we will all be at Beaver Creek at the Beaver Creek Conference, the Precious Metals Summit. It is the largest and most exciting conference around the world for exploration-focused mining companies, and it's right here in our backyard. Quentin, myself, Tavi, we will all be there next week. We'll also be at the Colorado School of Mines on Friday for a mining conference that they're doing there, and I'll be speaking at that conference. But it'll be exciting. We'll be doing video recordings at Beaver Creek with CEOs and the GEOs at a number of our different activist positions that we have in our portfolios, and we'll be putting those videos out in the coming weeks as well. So anyway, we'll see you all again in 2 weeks. Thanks.